Everybody? Good morning. Happy Tuesday. Welcome to the morning show. This is Stock Market TV. I'm Spencer. I've got JC. I've got Steve. I've got Alfonso with me this morning. A lot to get to. Kenny Glick on the show. I think maybe we'll have Patrick and Sam Gatlin stop by for a few minutes. I wanted to bring Sam on yesterday, but we got sidetracked with the whole Masters thing, and he wrote a really good post about the beat report I wanted to talk about. But our main guest today, our featured guest, is Dean Christians, senior research analyst and sentiment trader. He'll be on at 9. He sent over a few charts. So a lot to get to. Go ahead and drop me a like, a thumbs up if you'd be so kind. If you haven't already, just subscribe to our channel on YouTube. It'll just tell us when we go live. You don't even have to refresh the page. You'll get a notification. It's pretty convenient. All right, let's go. Where is JC? Where is Steve? Are they here? Yes, they are. Here we go.
Yo, Mr. Steve. We lost him.
We had him. He was just there. Where'd he go?
He was just there.
All right, well, I don't know what's going on there. When he comes back, we'll... that was weird.
Good morning, everybody. Happy Tuesday. You know what I was just noticing? I have I get random cuts on the side of my face. Because I wrestle with the boys all the time, but one of my twins goes straight for the face every time. And no matter how much you cut his nails, my wife cuts the kids' nails all the time. I get these random, they're paper cuts, just all over my face constantly. He just goes straight for the face. You're on mute, Spencer. We can't hear you.
My bad. I suppose face isn't the worst option. There are worse options.
They do that too. So
yeah. All right. Strazza, what's up, man?
That was us. Hey, Mr. Strazza, thank you so much for joining us.
Sorry, guys, I had to get my bull market shirt on.
Oh, I see what happened. I see. You look good. So is it a bull market? We went over some key levels yesterday of what it would take the market would have to do to get the bull market shirt. We went over a list of items. None of those things have happened yet. The bull market shirt is out. Can you explain to me the last minute audible here?
It's not a bull market shirt anymore. It's a rally mode shirt. It's a rally mode shirt.
Dude, back in the day, when the internet was first going up and I first started getting into Wall Street, we used to have this thing this rally monkey. Do you guys remember the rally monkey? Anybody in the chat? Are you guys too young for that, or do you remember the rally monkey?
I remember them talking about it on the news.
Yeah, there was a website. I'm making it up, rallymonkey.com. I doubt it was that. But there was a website that you would go and then you'd blast the speakers and the monkey would jump up and down and it was a rally monkey. And you'd play it in the office and everyone would get all fired up and laugh at the monkey that's dancing. That was a real thing.
We need to bring things like that back. I think they're very important to the culture.
All right, Spencer, are you listening to the man? Listen to the man. Take notes. You heard what he said. We're going to need to bring... Oh, that's not the rally monkey. That's a Fugazi. That's a Fugazi rally monkey. I never seen... This is an imposter. That's not him.
The rally monkey...
Take that off. He's on a vacation.
The real rally monkey wouldn't go on vacation during...
No, that's not the rally monkey. Get that out of there. That's a Fugazi. But agreed. Strazza makes a valid point. Spencer, get it done. We want the OG rally monkey, OG only. Please come to me as the official in-house expert of the rally monkey. I will approve the one we use.
We gotta bring fun back. We gotta bring fun back.
Who's not having fun? Look at your ridiculous shirt. You look like an idiot, but you're having fun, right?
We're having fun. I'm talking about everybody else out there.
Yeah. People take their lives too seriously. People on Twitter taking things personally. Bro, cheer up.
I got this Ring camera situation, and I set it up myself. And it keeps dinging at me. Thank you, Spencer. It keeps dinging at me and telling me there's somebody at my front door. There's never anybody at my front door. So
Dude,
either
it's crazy.
I have a yard
my
goat,
wife has alerts on her phone. So every time that FedEx or UPS are at my house, which is constantly, she gets alerted. I'm like, is that not annoying?
You guys can't top me. I have that too, Steve. But I live on the corner, and there are a lot of kids on my street walking to the bus stop every day, right? So I get I don't know, 20 or 30 a day. Plus,
It's terrible.
the guy who installed my Ring didn't do it right, and my doorbell rings just intermittently throughout the day and night. So I gotta get that fixed.
I
But
did a good job, but I thought I was getting it to watch my own house. As it turns out, it's just to like spy on neighbors and people walking by, which I didn't know that would be the case.
You know, what I like about these Ring cameras is that you get like funny videos, right? Like you'll see like, like the Florida man walking to, and then the alligator shows up on his front porch, or like, right? I mean, just random funny things happen.
yeah.
I like it.
All right, let's talk markets.
All right, let's do it.
Yeah.
All right, ladies and gentlemen, we've got the Dow futures this morning down 0.33%. That's 40,600, down 140 handles. We got S&Ps down close to 0.33%, 54.24, down 16 handles. NASDAQ 100 actually leading this morning, only down 20 bips. That's 40 points, just under 18,900. 30-year futures down 0.33%, back down to 114. We've got crude oil down 2/3%. This morning, crude oil down about 90 bips, almost a full percent, down to 61. Copper down 1%, 457. We got gold up a smidge, 32.32. We got silver up a smidge, 32.25, with the VIX flat right at 31. Over in funny money land, we've got BTC up 1,000 points. That's 1.2% for BTC, 85,600. You got the ETH, the biggest hot piece of garbage on the planet, 1635, up 0.2% this morning. And finally, you've got Solana 132, up 2%. That relative strength in Solana continues to stand out. Total crypto market cap, Mr. Spencer Israel, 2.66 trillion. How do we feel about this morning's futures?
Can I talk?
Go ahead.
Can you hear me?
Yeah, loud and clear.
Says I'm muted. I don't know what's going on. Who's muting me?
I don't have those kind of powers. I have a lot of powers around here. I don't have that one. That one's above my pay grade.
Solana, dude. But does the dollar?
If I could mute you, I would use it all the time.
Yeah, no,
I can't.
We shouldn't be allowed to do that to each other.
We should get one mute to each other per episode.
Does the dollar concern you?
Does the dollar concern me?
Yeah.
I believe you're referencing the United States dollar.
Yeah, that's the one.
Because I saw the New Zealand dollar making new highs. You are not interested in the New Zealand dollar?
No, not that one. So the bond market volatility is hitting new highs out here. See that? See the move index? That's interesting to me. VIX is well off its highs
last week.
The VIX is well off its highs, but the move index is pumping here. So I don't know. I mean, that's definitely just another data point that suggests not out of the woods by any means, right? You said you went through a checklist. Not a single item is checking the bull box right now.
Yeah.
Stuff like this.
We literally went through the list yesterday, and you put on the bull market shirt anyway, but now you're claiming that it is a rally monkey shirt. Is that right?
Rally monkey. Sure.
Rally monkey shirt.
It's when we're buying stocks and we're buying calls and we're putting on long exposure. I think that's what this shirt should be for. It's been too long since I got to wear it for a bull market. And it's a fun shirt. We just talked about it. It's important to have fun out here. Trying to have some fun. God.
Are you concerned with the United States dollar out of curiosity since you brought it up?
I'm concerned with the volatility in both Forex markets and fixed income markets. That has to stop. That has to stop if we're going to find some sort of tradable low here, which I thought we were last week, but these things still happening. Big candles in Dixie, wide ranges in the US 10-year, day in and day out. I don't know. Not looking so good.
Let's look at some of these Forex markets there, Spencer. If you want to head over to the new slide 2 there. We'll look at the first 5.
I like Bitcoin.
We'll get to Bitcoin in a minute. Let's stick with currencies. I think Bitcoin has proven that it is not a currency, right? I think that's probably right. Euro hitting multi-year highs. Remember, this is a great lesson, Strazza. Tell the folks so that they know. how annoying I am at the end of every year when it's whipsaw hunting season. Tell me how
Yeah.
annoying I am.
It's real. You talk about it every year, and you're usually right about it. We see it all the time, over and over and over
I
again.
wouldn't say I'm usually right about it. Well, I am right that something ends up coming out of there. Yes, that does happen consistently.
Yeah.
But I'm not always right about what asset is going to be the winner from whipsaw hunting season. This year, I didn't know, but I was really confident, or at least the most confident, I should say, that it was going to be the dollar, just because the way the positioning was, how extended the trend was. I'm pretty sure you agreed. Like, I think we all agreed that the dollar was very vulnerable for a huge unwind and the winner of whipsaw hunting season, if you will. And I'll just take a step back for a second. Those wondering what the hell JC's talking about. So what happens around the holidays, after Christmas, New Year's, like around that time, trends that are already extended, right, tend to extend a little bit more than they normally would if it was any other time of the year. And then come the beginning of the year, then you get that reversal in the other direction. And coming into the new year, speculators were the most short euro they have been in quite some time. Same thing with Swissy. The dumb money was super bullish to US dollar. You had that Economist magazine with the Benjamins rolled up like a rocket ship saying the US was the envy of the world. I mean, there were so many things pointing to, I'm pretty sure that's not the case at all. We want to take the other side. And the dollar was just like, there were a lot of things saying that it was probably going to be the dollar. As it turns out, holy shit, was it the dollar? Look at that rally in the euro.
If I told you in January, dollar's going to fail this breakout. Do we have the dollar chart so we could look at it, see what I'm talking about?
Yeah, I could.
Dollar's going to fail this breakout at the upper bounds of its range and get smashed right to the lower bounds of this range. JC, what are risk assets doing?
Yeah, I would have said for sure they're absolutely ripping in your face.
So all of a sudden, this really strong inverse correlation between dollars and stocks that we've been leaning into for years just comes undone. Not just comes undone, it more than dislocated, it flipped the book on us. And now you look at a chart of dollar and stocks, they look exactly the same since late last year, both crashing together. That has to change, or else we don't have this environment, this intermarket landscape anymore where we can say, oh, lower dollars breaking down, that's good for risk assets. It hasn't been. It had been historically, and then that stopped. So the way that you deal with intermarket relationships like this is you only lean on them when they're working. And right now, there's nothing there. In fact, you have a very opposite thing of what is usually there in a sense that they're moving together. So it's just important to be mindful of. I don't know if there's a trade to be made off of it. I think you can. I think
it's a Duran song. Who do you need? Who do you love when you come undone? Right? Remember that song? I think you're too young for that. Are you too young for Duran? I think you are.
A little bit. Yeah.
He's like, I don't know what you're talking about, old man.
I know who that is.
How about this? How about this correlation? How about the relationship between the US dollar and yields? Like, that's the bigger thing, I think, that's caused the market to cause that stock market volatility. Because think about how many trades and strategies and positioning are tied to that relationship staying intact, more so than the stock market relationship. So think about all of a sudden you have rates ripping and the dollar falling apart. Like, that's messing up a lot of things out there in macro land. And I think that has helped increase the volatility in stocks. Tell me I'm wrong.
No, I think that's a great point. And this just started 2 weeks ago. Rates started rocking higher and dollars just kept plunging.
So that dislocation in the Forex and fixed income markets, remember, there's a $130 trillion bond market. This is a maybe $2.5 quadrillion Forex market. Like, that's where the real money is. The US stock market is 55 trillion. I mean, it's a rounding error in comparison to those other assets. So I think that the dislocation of that relationship between yields and the dollar, I think, had a major impact on the volatility that you've seen in the stock market. I agree.
So. I agree. And I think you want to see things like the MOVE index chill out, right? Bond market volatility kind of settled down. And the same with Forex market volatility. Just look at the candles in the dollar for the past couple of weeks. It's crazy.
Throw upside 5. Let's check out the rest of these. Let's check out a few more currencies just to give the folks some perspective here. So when the dollar's getting slammed, there's other things that are doing well. Euro hitting new multi-year highs. Swiss franc, hitting new 10-year highs this week. Throw up the zloty. Shout out zloty. Properly pronounced złote. Złote. For you gringos out there, it's the Polish Złote hitting new multi-year highs. Look at the Brazilian real. Little scoop and score in real there, Mr. Strazza. Little scoop and score.
Big fan of the real. Did you already do the sake? Big fan of the Swedish krona right now.
Swedish krona also looking great. You know, listen, when Strazza's talking Swedish krona, I mean, come on. Like, that is good. That is good stuff. And then finally, throw up the Mexican peso there.
JC,
Shout out Mexico.
JC, I think that real is like about to go. And if you look at the base in the peso too, you got this nice little tactical base in the MXN. These things are both ready to pop. I think it makes sense that they
throw up that 61.8% retracement there. Look at that. Come on now. You think that's just a coincidence, dog?
No, these charts look as good as anything. I want exposure to the real right now. That's a juicy market.
And let me ask you something. Is there any other point in your entire life that you have said those words?
There hasn't been. No.
There hasn't. So this is the first time those words come out of your mouth.
I'm going to give you two names right now for everybody.
You know who would be so proud of you and who I emailed this morning? Matt Warder.
Look at the StoneCo, STNE, and the PAGS Seguro, PAGS. Okay, there are good vehicles out there to get long real. You don't have to be a futures trader. Real is one of those currencies where the Brazilian stocks, Brazilian ADRs will tend to move more based on the price action in real than the price action in the local stock market.
Hold on,
you're making a currency bet.
Is Stone Brazilian?
Yeah, overlay the real with it, man. It's real.
I didn't know that.
Oh yeah. I got the charts. Do we have those charts, the overlay charts, the reals with those? We don't want to give too much away, but we're really liking the Brazilian stuff lately. We're really into the Brazilian stuff.
I don't think you put the S to pluralize real.
Big fan of the Brazilians.
I think I think that real? It's just real. Real is also the plural.
I haven't been saying reals. I say real.
StoneCo says it's from Cayman Islands. Do they have a lot of Brazilian exposure?
Yeah, it's Brazil, man.
So it's one of those things like the what's the Kupang? Kupang's in Korea, but it's based in Seattle. It's one of those kind of things.
Mm-hmm.
Yeah. Mm-hmm.
Mm-hmm.
All right. Yeah, I like it.
StoneCo gives you some good real exposure.
Hey now. I think you've been in South Florida too long, bro. You need to hang out with Jose. Jose's new girlfriend is Brazilian.
It's amazing that I can't speak Spanish yet.
You're never going to speak Spanish.
You don't think I'll get there?
I don't think so.
I can say things.
You're working on your golf game. You can't be working on your golf game and like learning another language at the same time. It's too much. You're either good at languages or you're good at golf. You can't be good at both. You know what I mean? It's too much.
How do you say golf in Spanish?
I think it's just golf. Abuela, jugar golf. Yeah, I think it's just golf.
All right. Hey, that's an easy. I know that one. Now I just learned another word.
Yeah, Alfonso says it's golf. Yeah, there you go.
That's fantastic.
Yeah, I mean, that's like some words, like for example, like they didn't have hot dogs in Cuba, right? Like they didn't have them. So they got to the United States and they were like, oh, this is called a hot dog. So they call it un hot dog, right? Hot dog, right? Things like Thanksgiving. Like they didn't have Thanksgiving in Cuba. So like when they get to the United States, what are they going to call it? They call it Thanksgiving, you know? Sangimi. Ah, Sangimi.
I'm not talking about StoneX. Talking about StoneCo.
StoneCo is software.
Yep. Financial software.
Yeah.
Pretty cool.
All right. I know we got some guests on here. Mr. Spencer Israel on the ones and twos.
Hold on. Real quick. Bridal Mac. Take it easy out here. Strazza riding the crypto bull again. I cannot be more clear. This is not a crypto bull. By no means. Any measure. This is not a crypto bull market. We're playing a bounce. Not a bull market. We're playing a bear market bounce.
And for the record, bear market bounces historically are the best bounces.
You can repair some damage. Bitcoin can go right back to a primary uptrend. It's not broken, right?
If it takes out 90, it's out. And by the way, one more thing, and then we'll go on to Spencer. Sorry, Spencer. S&Ps retested the prior cycle highs. NASDAQ retested the prior cycle highs. Dow retested the prior cycle highs. Bitcoin did not.
Yep. That's a great point. and you find these like markers right throughout time on the price charts, and that's a great way to measure the resilience or relative strength during periods like this. So Bitcoin continues to stand out, but I have a problem with the phrase crypto bull because there's like 2 or 3 things that look good in the entire asset class. That's why it's not a crypto bull. It's not about Bitcoin. There's other stuff that needs to be working.
Bitcoin and Farcoin.
Right. I haven't looked at that chart since like I don't even know.
Hit new year-to-date highs. Highest level since November.
It's crazy. Spencer, are you hodling your fart coins?
I do not own any Farcoin currently.
Spencer, are you hodling your fart coins?
I was on mute. Sorry. I want to ask about Bitcoin for a second. Something that JC said last night. So JC showed a chart of Bitcoin, and he said he likes Bitcoin above a certain level. It's not there yet. And then the very next chart, he showed IBIT, and he said, I like IBIT above a certain level, and it's already there. So, and I understand that IBIT and Bitcoin won't have like an exact correlation, right? There's going to be some differences here and there. But JC, why would you want to buy IBIT when the underlying asset it is based on is not where you like it to be yet?
Great question.
That is very astute of you, Spencer.
I was paying attention last night.
Dude, very astute. I mean, Spencer, you've been impressing me quite a bit this week. I just want to admit, very good questions coming out of you, DJ Spence. Listen, at the end of the day, we do a lot of intermarket analysis. We look at a lot of things, but we got to trade what's in front of us, right? From the IBIT perspective, I don't have a problem being long above last year's highs. From a Bitcoin standpoint, I own some. I'll have a much more material position if we're above 90, and I'll really be all in if we're above 102. So that's how I look at it. I think there are levels to this game. You know what I'm saying? Levels. And the relative strength from BTC, I think, is really impressive because we did not retest those former highs. Got close.
And I think at that point, right, with something like that, JC, that's going to happen. Right, because we have these trading vehicles that are based off of other spot markets or futures markets, and I think at that point you look to one or you look to the other as confirmation, right? It shouldn't take long. Like that shouldn't be the case for very long, Spencer. IBIT's above a key level and Bitcoin's not, so I think you could use it for confirmation in a trade.
Well, these are the charts right there, right? So you like IBIT above 43.
Okay, where's the other one?
It's above 43.
Yeah,
right.
So, yeah.
Go back to the Bitcoin. Right? Yeah. So I don't know. I just thought it was an interesting way to go about it, right? Like
I still think 90s is the big level for Bitcoin. I want to see Bitcoin back in the 90s.
I agree wholeheartedly with that. And then Bitcoin, at the end of the day, Bitcoin, S&Ps, NASDAQ, Dow, they're all in no man's land, right? Purgatory. Yep. They're below overhead supply. They're above support, and they're right in the middle.
I think you can literally put Bitcoin and Solana and Ripple in a category of relative strength, just like we're talking about other groups that have been showing relative strength in this market, right? You treat the cryptos and the crypto trade as just another area of relative strength. Brazilian ADRs, okay. Cryptos, that's just a theme. It's an area that's been holding up really well. Maybe you get some sort of beach ball effect coming out of the selling pressure. Okay, I'm good.
Cool. You want to talk to Mr. Glick?
Please.
Yeah, the Warlock, as he is known in some corners of the world. All right.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Hello, boys.
Glick, how are you, sir?
Good. What's shaking this morning?
You tell me, man. NASDAQ is flat with some equities down this morning. NASDAQ showing relative strength. Talk to me about the day yesterday. We had a little bit of a roller coaster ride.
Yeah, you know
does
what?
That continue today?
I'm embarrassed that I forgot about Webull. My God. You guys know about this IPO that came out Friday afternoon that just slipped under the radar? Webull came public with a nice float of 9.5 million. They learned from the Newsmax IPO how to run your stock. And wow. I
was not in front of my desk Friday afternoon. I didn't even know about this.
It was a SPAC, Spencer. So you're anti-SPAC, so that's why it was not on your
Don't
radar.
even get me started.
You anti-SPACite.
You're so racist to SPACs, bro.
Are those still a thing? Are we still
Give me a ticker.
Well,
Can
you
give
brought
me?
up a SPAC, so clearly there's still a thing.
Can
Wow, bull.
you give me a ticker? What is
It's
this?
BULL. And yeah, it was shortable yesterday for a second, and then they took it
Holy
away
shit.
from me, which was no fun. But it was just one of those IPOs where once it got into the 20s, we started joking around about, okay, here we go again. If it gets into the 30s, probably goes to 50. If it goes to 50, possibly hits 80. And it hit 80, 79, 58. And it's just the mechanics of the market that I learned back in 1997. It's amazing how they still play out 30 years later. This 5, 750, 10. Because I think it's all tied to the original options market when you only had monthly option contracts trading in 5-point increments, 2.5, 5, and sometimes 5s and 10s. And the market just seems to just obey those rules still to this day. It is pretty fascinating.
What's the market cap on this thing now?
$4. I'm not sure.
No, the market cap 30 billion.
Yeah, 30.
It was up 375% yesterday. Is that all? That's all. That's all I had.
Right.
It's like they didn't even try.
I can't believe I forgot to mention it because we were on the stock and well, some of the guys in the room, I didn't trade it Friday. I wasn't even around. But
I love. First off, I use Webull. I've had a Webull account for years and I use it. I love this quote.
What is it?
It's Robinhood, but it's a little better. They have more data. Anyway, I love this
American
quote.
company?
No. Chinese company.
oh, no way. Is it? It's another tiger.
Well, the difference is they have U.S. operations, but they are owned by a Chinese company. Anyway, I love this quote. This is from the CEO, Anthony Denier, who I've met. He's a nice guy. He goes, Webull users are, quote, much more intellectual, unquote, than Robinhood's users.
Oh, there it is.
And no, in all seriousness, I've had, that's where my trading account is, my like super short-term stuff. And I think it's a great platform. I've used it.
Oh, okay.
I've used it for years.
Are they the one that you could have a master account and have other people follow you for a price, or is that eToro?
I mean, everybody has that.
Everybody has that now. Oh.
That's eToro's thing. So that's who you're talking about, but that's not like a new thing. But yeah, I mean,
I've tried the mimic trading. There was one of the original called Ditto Trade. It was like trading on a VIC 20. If you guys remember the 80s, VIC 20, the supercomputer of the 1980s.
It's not.
Yeah, it's just, and then you can't scale it up either. It's just awful. It's just really terrible.
No, but seriously, I mean, as far as like data goes, they do a really good job of cramming as much data as they can into your little phone screen. So yeah. I like it. I don't have like real money there, a small account, but I like it for what it is. So
cool. Well, other than that, I mean, yeah, yesterday was it was pretty nice, calm, cool, and collected. So I came in, we were just talking about there's no fade and there's no trading, and we faded. So I came in yesterday a little disappointed that I didn't hold on to some Apple, because every time it's gone to 175, I promised this time I'm going to hold it. And then it got back to 175 3 different times, and nor of them did I hold any of it. But seeing the market gapped up so big on Monday, first thought I was to say was let's short something. So Goldman Sachs and the Qs was the go-to names. Goldman Sachs provided you 4 or 5 points twice. So the reason it was a nice calm day was that you got the fade. You never had to get stopped out. There was no up move at the open. So you got paid rather quickly. And then it kind of, gave you 2 or 3 more opportunities to get short. And then we kind of bottomed out at prior day VWAP. Shout out Brian Shannon, anchored to the prior day. And it held. And then we rallied back to today's VWAP. It was beautiful. It was wonderful. And it was like, again, pre-programmed. And, a shame that I missed out on the Webull, but just a lot of good trades yesterday. Just focused on Goldman Sachs and the Qs and, UVXY getting hammered. And today's action is pretty good so far also. The Qs, they were gapped up this morning. So if you were looking for a reason to fade, you got the fade. And you don't see my charts. Hang on a second. I'll show them to you. There's a lot of weird ones again this morning, as always. I'll show you a couple of these small cap names. But here's your Qs. Again, if you woke up relatively, 7 o'clock, there's the fade. And then we got the faux show bro happening right now. So if you're just charting these chart patterns like we normally do, there it is. So you got your fade, you got paid. And then when it breaks back above that shakeout area, you need to cover and possibly go long. And now you're above VWAP. So fade into the faux show, bro. Let me live this day over and over again, because that's the trade. These are my setups. So continuously, actively trading is the way to go. And Today I got one of my faves. There was a company called Desktop Metal. This one is called The Metals Company. I'm sure it has nothing to do with Iron Maiden, but it's rocking so far. There's your faux show, bro. VWAP break. We got long around 330 right here on that top of that move right there, getting paid right now. Again, 20-cent move on a 30-cent on a $3 stock. That's what it's all about, hitting new highs right now. SBEV, I believe this was a weed drink company back in the day. I'm not sure what's going on here, but little popping and dropping. That one's in play. But going right back to the banks, you got Citibank, faux show and broing, Citibank, Bank of America. So I'm going to be focused on the real stocks probably when the market opens up, Citibank, Bank of America, and, of course, Johnson & Johnson. So Johnson & Johnson, not a lot of volume here. I don't usually trade these things with no volume and big prices, but you already got the washout. You're right below the VWAP, so looking to see if I'm looking to buy maybe some Johnson & Johnson later on today. But a lot of action with $2, $3 stocks so far.
Listen, in case you guys hadn't noticed, the best way to describe what Kenny's doing here is very simple. If you are looking for the stocks that are making the biggest moves every day, there's nobody better on the planet than Kenny Glick. I mean, for me, like that's the big value. Like a lot of the stuff that you do is very similar to what we do, but on an intraday basis, right? Yeah. For me, like selfishly, everybody likes Kenny for different reasons. I like the voices that you do, number one. And number two, I like knowing that you're going to give me the names that are moving the most that day, every day, right? Like, I can't do that, right? I swear to God, I've been doing this for over 2 decades. I wouldn't even know where to go and look and see what the biggest mover, you know what I'm saying? Like, I'm sure there's a way.
It's actually surprising we did all miss bull. I mean, I thought that was it. How do we not see a stock with the symbol bull? But yeah, I mean, it flew under the radar kind of. But yeah, usually again, these cheap ones, we leave these alone unless they give us a reason to concentrate on them later on today. But I'm going to stick with the banks. But also to your point, knowing where the money's going, but now knowing where the top earnings plays are, that's where you want to focus. And also gives you an indication of strength. Cooperman was talking about the other day, like how to pick this bottom. He's like, when these earnings reports are bad and the stock goes up, boom, guy knows what he's talking about. And it's that simple because, a month ago, we saw FedEx. Usually in a better market, they shake those numbers off and you rally. Nike, they shake those numbers off and they rally, and they were still getting hammered on earnings. So when you see that turn, and again, I'm focused on mostly earnings reports and, these cheap ones in the beginning of the day, you see the strength of the market. So that's what I'm looking at. So if the banks give it up today, we're still in store for some more volatility.
Love it, Kenny Glick. Spencer, tell the folks where they can find him.
Hitthebid.com. That's where his room is. That's where he is right now. And he was there before he came on the show. He'll be there after he's done with the show.
I never leave. Actually, I am leaving this week. I'm going to hang out with some lambs and get my zen on. So
you should eat some.
No eating the lambs this week. Yeah.
Is this like an ayahuasca thing, or?
Yeah, no, we're just gonna hang with the lambs. We're doing nature walks and just getting into.
You're just gonna hang with the lambs. You're not even gonna eat them.
Not eat the lambs. No, we're just hanging with the lambs. Holding the lambs, embracing the lambs.
Kenny, Kenny, you're hanging out with lambs.
Hanging out with lambs, and not.
I'm gonna run down. I'm gonna run down the road like I'm Clarice Starling. If anybody gets that reference,
you're hanging out with lambs on Passover.
Yeah.
The irony of that is so rich. I don't even know where to start.
But my point is I won't be around Wednesday afternoon and all day Thursday. So if you want to see my algorithm guy at work, come to the room. It is absolutely fascinating what he's built around our faux show bros and our VWAPs. And, again, his name is Salagello, and he's fantastic. And I'm going to get him teamed up with Nos, and we're just creating some good stuff.
Yeah. All right. See you, Kenny.
My man. See you, Strazza.
Right. Hey, Kenny. I just have a quick announcement for people. So Gemini filed for bankruptcy as of, I believe, March, end of month. You have to get your funds out by today. Today is the last day. So if there's anybody out there who had a Gemini account ever, and trust me, I haven't used mine in a long time, but you leave money in these things sometimes. You got to go get it out today. So I'm going through that right now. And I'm looking back through my transaction history. This is the first crypto account I had with Coinbase. And my first deposit into it was November of 2017. And if you remember that time, that was the famous crypto Thanksgiving. Really, the first one. So I'm just sitting here, I'm feeling nostalgic. We've been involved in these crypto markets for almost 10 years now. JC's been involved longer. I think he got his first Bitcoin for like writing a blog post in like freaking 2011 or something crazy.
13.
But it's wild to think how long we've been trading and involved in this asset class for. It really is. It doesn't feel like that
you
long.
want to laugh, Strazza? You want to laugh?
What?
First of all, it's a great heads up for everybody. I'm gonna go check mine, see if I have
Go
money
check
in
your
a Gemini account.
account. Yeah,
I probably will. I hope it's a lot. I doubt it is.
I have a couple $100 of Sandbox.
Do you? I'm curious to see what I have in there. I'm gonna go check. I might not have anything. I don't know that I've ever had a Gemini account. I probably did. But here, you want to hear something funny? So
What?
I get a letter. I get a letter from DraftKings. Literally a letter from DraftKings telling me that I have approximately $500 in miscellaneous intangible property at a sports book. $500. And my wife is opening the mail and she's like, "You have $500 in this account at DraftKings, and if you don't get it out," I have until Thursday to get the. I don't think I have to get it out. I think I just have to log in just to show you how little I didn't even know I had a DraftKings account. That's how little I gamble.
That's great. I thought. Hold on. I thought you were gonna say that they were like sending you a tax doc to report your.
No,
gamble.
they're telling me this is like Monopoly, where it's like, "Oh, you found $500." You know, it's kind
Morgan
of
knows now.
Let this be a PSA to all. Google unclaimed property in whatever state you live in, and you can search your name, and they will tell you it's called a sheet, right? If you have any money in accounts you don't even know you had, your state will track it for you, and they'll keep it for a while, and then they'll just take it after a while. So,
real quick, what is it? Gemini.io?
I'm in it right now.
I don't know.
It's Gemini.com. Exchange.gemini.com.
Gemini.oh no. Okay. Dean Christians. Yeah.
Spencer, before I forget.
Yeah.
Happy Tax Day to accounting professionals and tax preparers around the world. This is a really big day. Especially Dad, love you. You made it through another one. Happy
Great.
Tax Day, everybody.
Let's bring on Dean Christians from Sentiment Traders, a senior research analyst.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Dean.
Hey guys, how you doing?
What's going on?
Not a whole lot. Thank you for having me on.
Thank you for coming on. This is a great time to be talking about sentiment because, by a few measures, I mean, we've had some pretty extreme sentiment for a couple months, right? We always talk about how sentiment can stay extreme for a long time. You're literally seeing it in real time, but it's not all the sentiment measures that have been extreme. So very, very much looking forward to this conversation. Kind of just wanted to hear your thoughts right off the bat.
Yeah, I mean, look, sentiment has obviously fallen price and come way in just about any measure that you look at, surveys. Put calls probably didn't get as pessimistic as you really want, but generally speaking, the mood is pretty dire out there, which generally means if you have a long enough time horizon, it's going to benefit you to the long side. In the near term, again, it probably creates a lot of just sort of choppiness. One of the things about trading or investing is, look, it takes confidence to pull the trigger, to either make that trade or make that investment. And when people's confidence is sort of shot, they're hesitant. And that's what sort of creates the choppy environment around market bottoms. So, sentiment is doing what it should be doing. There are a few things here and there that make you wonder. Like, I saw a chart last week where, $1.5 billion went into the triple levered QQQ. And it makes you kind of scratch your head there, whether that's bullish or bearish. But
we don't have anything to compare it to. Right?
Exactly. And
it's the denominator fallacy here at this point, right?
Yeah. And one of the things I do, JC, is I look at the value traded and TQQ versus SQQ. All right. So that's the triple long versus the triple short.
Yeah, that's better. Yeah, sure.
I look at that value traded ratio and it popped up, but it got nowhere near what we saw in 2022 or, the COVID meltdown or even 2018. So, it leaned bearish, but it didn't lean super bearish for, what was almost a 20% drawdown. So, I think there's still people, even though these surveys may say people are bearish, I think that over the last, decade plus, people are just trained to buy the dip. And, that can be a dangerous thing if something changes here, down the road. So.
You want to walk through a couple of these charts that you brought? Really
Yeah.
curious.
Hey, JC, before we do that, can we just talk about the dollar real quick? Because I heard you guys talking about the dollar. So I put out a note yesterday, and what I did was I looked at times when the S&P and the dollar have declined over a 3-month time frame, and both the S&P and the dollar declined by greater than 7%. I think the dollar was like 8 and change, and the S&P was worse, obviously, but after the balance, it was better. So the setup is all right, the S&P and the dollar are down greater than 7% over a rolling 3-month period. And then we looked at how many times that's happened. It's happened 8 other times in history, okay? 6 out of those 8 times, the S&P 500 made a lower low, okay? So the other 2 times it didn't, 1978, 1998. Of course, we know 98, you had LTCM. But when it did make that, that down 7% signal in 98, that was on the retest of the low. So it wasn't on that initial low. So again, I think what the dollar is saying is, look, I don't think we're losing, our U.S. exceptionalism. I don't think that the dollar, is going to lose its reserve status. This is just a repatriation trade, okay? And you see these in times of crisis or uncertainty that global investors will just pull back from the U.S., couple that with high valuations, and people have moved out of the dollar. I don't think it's anything more than repatriation. Could it go on for weeks or months? Sure. But look, at the end of the day, who's that going to benefit? It's going to benefit U.S. investors, okay? A year later, who did it benefit the most? Tech. Tech was the #1 performing sector a year later after you've had these down periods for the dollar and S&P. And again, we all know they're big multinational companies, so they should benefit from a weaker dollar. So anyway, just want to put that out there, just so that everybody kind of understands the context of what's happened here.
Listen, before we get into the charts real quick, you're in Atlanta, if I recall, right?
Yes.
Dude, let me tell you something, man. I had some time this weekend down in Augusta. That was holy shit. I have such a huge appreciation for Georgia and the South in general after this weekend. Just wanted to.
No, look, I go down, roughly every 3 to 4 years, and it is just fabulous. It is
wow.
What they've done and the show that they put on there. Obviously, the golf this weekend was incredible, but they're really, I've been to Super Bowls, have been other events, it is phenomenal what they do there.
I couldn't agree more. Anybody can go to the Super Bowl as long as you have the money to pay for it. You can get in. The Masters ain't like that.
No,
and everybody's on their best behavior. It was wild.
Yeah,
I was eating the pimento cheese. I was doing all the Southern things. We were having chicken biscuits for breakfast. It was something, man.
Well, how about the prices, JC? There's no inflation at Augusta National for food prices, right?
They are at the souvenir shop. But dude, everybody told me how cheap the food was. It was somehow less expensive than I thought. It was crazy. It was wild. Yeah. It was fun. It was fun to see. It was cool. It was so cool. Like definitely a moment I'll never forget, for sure.
Yeah, absolutely.
All right, enough of that. George is great. Yeah, it's there's a whole world out there. Talk to me about what you're seeing here, Spencer. If you want to throw up slide 12, talk about that capitulation indicator.
Yeah. So Spencer, let's go to the chart. Do you have the chart first? All right. So what are we looking at here? This was an indicator created by a guy on Twitter who's anonymous, and with his Twitter handle is @MrBondMacro. And he threw this up on Twitter a couple years ago, and I recreated it. Some of the measures are slightly different just because I didn't have S&P 500 stock data going back to the 20s, but I have the sub-industry data. And what I really like about this indicator, JC, is it combines price momentum with breadth. So we get two sort of different metrics And so we combine it all together. We measure these 2-year rolling Z scores. And look, when it plunges like it did, a week or so ago, there's a pretty good chance that the market's going to rally. And you can see when it's below negative 4.25, annualized returns are huge. I mean, you're up at 2,700%. Now, look, just so everyone knows how annualized returns work, when the indicator is below a level, you measure the next day's return. Well, if the next day's return was like last week where the S&P goes up 9.5% in a single day, when that indicator is below that level, well, guess what? When you annualize 9.5%, that's a massive number. So again, we had this capitulation signal. And so our view is that, the market is going to bounce. We think that's a tradable low, probably, in my opinion, for now, it's the internal low. I know, JC, you talked a lot about the internal low back in 2022 being June, even though the S&P went to lower lows in October. And that's a very, very important concept that people need to understand is measuring the internal low versus the external low, which is the index low. So let's flip over to the next one here, Spencer. No, go back to the outlook table. And what you can see, look, 6 months later, you're higher 92% of the time. So, the odds are here that, favor a rally.
92% of the time compared to what? What's the number? Is it 80, 75? What's the normal?
Yeah, 6 months. I don't have it in the table, but I think generally, off the top of my head, 6 months, you're higher at somewhere in the high 60s, maybe low 70s. If you go back to 1928 and look at that. 12 months later, it's usually like 72, 73%. So significantly better. And what you can see, the Z score down there, JC, it says 2.4. So that, that accounts, what the median return was relative to the median return over the entire study period. It takes into consideration the number of signals, your win rate and all that. So, significance, that means, your return is greater than the return would be just over that whole entire period. So good chance that, 6 months from now, we're going to be higher. In between, look, I mean, anything can happen. I would expect that we probably come back down. Maybe we make a lower low. A lot of this will depend on what is going on with the economy, after we get, we bounce higher here. But the odds favor that, we're probably higher 6 months from now. Again, between now and then, there's a lot of repair that needs to be done under the surface of the market,
Can we talk about this capitulation? I love this.
Yeah. So again, it's looking at the percentage of it, sub-industry groups down greater than 5%. I think down greater than 20% and greater than 40%. Then it looks at the 3-month rate of change for the S&P, the 6-month rate of change of the S&P, combines it all into a rolling Z score over 2 years. And, just an excellent indicator to measure oversold levels. Now, a lot of times what'll happen, is as we know, markets can get more oversold. So, it dropped below 4% and it got as low as 4.8%. And then, obviously it's now come way off of that as the market sort of popped. I put in a note when I published this note, last week on this indicator, I said, one of the analogs was 2015. And I wouldn't be surprised if this isn't sort of price action that we might see over the next, 3 to 6 months is real choppy, big sideways range. Again, we've got to repair the damage that has been done to the market and individual stocks. And so, we probably chop around down here. If all of a sudden Trump, starts announcing more and more tariff deals, that's where you probably get the larger rally up towards the upper end of the range. And then if you do come back down and retest the lows, it's probably under the scenario that, confidence in the consumer is taking a big hit and the economy slows, right? And that's what gets you that retest, probably ends up just being a growth scare retest and not a recession. I don't have a recession in my cards right now. But again, I wouldn't rule out this big trading range as we sort of repair all the damage. That doesn't mean that you can't make money, in this range. It's just you got to recognize we're in a range. You buy the dips, you sell the rips, and then just continue to look for stocks that are exhibiting, good relative strength. And what I do in this environment, is I want to look at offensive stocks. I don't want to look at defensive stocks. We know the defensive guys are at the margin are probably going to outperform if the market comes back down. And but what I'm looking at is what stocks are at the upper end of their range in terms of their relative ratio. So keep those stocks on your radar.
Based on everything that you're seeing, I wanted to show you. You were talking about people are looking at recession. If you could throw up slide 2 real quick there, Spencer. The fund manager survey has got half the fund managers are looking for a recession. That just dropped. So you were just talking about you don't have recession in your site. Well, the fact that half the fund managers do probably, it gives you another checkbox that there's probably not one coming, right, Dean?
Yeah, nah, absolutely. And I'm sure this survey was probably taken right before or right after, the plunge. And everybody said, oh, my God, the tariffs are going to cause a recession. Well, are they really? Because, all of a sudden, if we start reaching deal after deal after deal, that's probably not going to be the case. But look, at the end of the day, JC, you and I know the best measure that's going to tell us whether there's a recession or not is the S&P 500. So
that's exactly right. That's exactly right. So getting back, so I wanted to just drop this because you did just mention it, but getting back to sort of moving forward, like you're looking for choppiness. You're looking for choppiness in that environment. You're looking for more offensive areas. Are you looking for more offensive areas for the bounce, or are you looking for more offensive areas for the next leg of the bull market?
Well, a combination of both. I want to be in offensive areas for the bounce. Look, if you go back, and I've gone back to like the 50s, and you look at every single 10% correction, or you look at bear markets, whatever, guess what leads 6 months later? Technology. Okay. And it's astounding. It's like 86% of the time, technology is the best performer on a relative basis after these big corrections or even bear markets. So, that's where I'm predominantly looking. That doesn't mean there's not some good charts, like Fiserv, looks good. Okay. There's plenty of opportunities, but I want to look offensive, whether it's the bounce or after we've sort of, chopped around, we've done this repair process, then I'm still looking offensive because the statistics favor those groups coming out, whether it's a 10% correction or a bear market, what have you. That's where you want to be positioned. Now, if we do get the recession scenario, then you want to throw consumer discretionary in that bucket, which is, again, typically one of the best top 1 or 2 performers coming out of a recessionary bear market. But again, that's not like in my cards right now. So, predominantly I'm looking within the tech realm. Financials still have a lot of charts that look pretty healthy.
Yeah, they do. Not just in America, but around the world.
Yeah. And again, I think I've said this before on the show, financials are the critical group when, you're assessing the potential for a major significant drawdown or some sort of crisis, right? They've proven to be the best group that sort of identifies that there's a problem in the system. And again, those charts still look very healthy, very constructive. And so that to me is telling me, well, there's really not some sort of major systemic problem. That's not to say that it can't happen after the fact, but it didn't happen before. Let's keep in mind, before the tariff tantrum, the market was already correcting. We were already seeing weak breath. Back in December, you saw 8% of S&P 500 issues trigger a 52-week low. That's usually not a good sign when you're within just a few percent of a significant top. So, we had this environment where things were sort of weakening under the surface. We were in a drawdown already, and then obviously we got hit with this crazy news about tariffs. But so again, it exacerbated the whole drawdown scenario. But again, I think for now we have to say, look, this is a large correction. Play the bounce. watch for some sort of retest. And then in the meantime, we're continuing to look for the strongest stocks on a relative basis that are in those offensive categories.
So technology, financials. You got a third?
Yeah, I mean, you could throw some of the consumer discretionary in there. You could throw some of the industrials in there.
I was going to say industrials. Consumer discretionary, it's hard to put in that same category, just because as a sector anyway. But yeah, you could. There's some. Yeah, I mean, there's so much happening in consumer discretionary.
Yeah. I mean, look, I wouldn't be looking like in home builders unless you're just looking for something where like it's completely washed out. But again, we got to remember, last week when I looked, the 30-year mortgage rate was still 7%. Okay. So that's not going to benefit anything within that home building ecosystem. Okay. So you got to avoid those groups, and you're probably looking more in the e-commerce when it comes to consumer discretionary.
All right. And speaking of international, the Mercado Libre looks better than the Amazon. Tell me I'm wrong.
Well, I haven't looked at that chart recently, but
pull it up. Pull up Mercado Libre and then pull up Amazon, and you tell me which one looks better.
Yeah, no, I will.
Dean, listen, I love this conversation so much. I'm a big sentiment guy. You guys do great work. Tell everybody where they can find you.
You can find me at Dean Christians on X. And then, of course, sentimenttrader.com. You can go there. You can sign up for a free trial. And, we provide a sort of technical / quantitative research report.
Love it, Dean. I just want to give a big shout out to the state of Georgia. Holy shit, do I love Georgia now. Hey. I hadn't hung out there as much as I should have. Clearly, big fan of Georgia. Shout out Georgia.
Well, JC, I don't know if you play golf, but man, we have got a ton of great golf.
So I've come to learn. I mean, I play golf. I wouldn't call myself a golfer. I belong to a nice golf course or a series of golf courses. I have friends who play golf. I was at the Masters. I was dressed like I play golf, but I'm not very good.
Well, put it's not in Georgia, but put Stream Song on your radar. It's down in Florida. Go down there with a group of your buddies. You'll love it. It's a phenomenal place.
I'm more of like a 19th hole kind of guy.
They have that too.
That's where I thrive, Dean. That's where I thrive.
There you go.
All right, appreciate it, my man.
Yeah, thanks for having me on, guys.
You got it.
Thanks, Dean. I don't know. Wait, Steve.
Spencer, the 19th hole is the bar.
No. Wait, Steve was asking what the name of the course. I don't know. I didn't catch that either. What was the name of the course that Dean just said? I don't know.
I'll figure it out.
Rewind the tape. I don't freaking know.
Rewind. It's on. We got to record it.
I don't know. All right.
I'm not gonna fly to Florida to go play golf anyway, so it's kind of like woo.
Yeah, right. That's what I thought too. All right. Kind of liking what we've been doing. We've been ending the show at 9:30 the last week. I'm kind of like that. Not gonna lie. I don't know how you guys feel. We can do a little recess if you want and get out of here. But there wasn't much else I had on my list other than to mention that Webull is down 20% this morning. But
after 375% to the upside yesterday, I'd say that's a win.
Mm-hmm. Shout out to Bank of America, Johnson & Johnson. The big earnings start really tomorrow, right? So I think we get Netflix on Thursday. So we'll talk more about that later on in the week. You guys do you guys have recess? If not, we can get out of here.
No, I already did mine.
Cool.
I did mine too. Shout out Georgia. Dude, eating chicken biscuits for breakfast at 8 a.m. It's aggressive. Strazza would appreciate that kind of thing, actually.
Yeah, I'm down for that.
They were delicious.
Yeah.
Stream Song, it's called.
I just didn't want to ruin my appetite for the Masters because I was planning on eating everything. So we're eating Chick-fil-A on the way there. Like I'm already setting myself back.
I love the image in my head of JC taking a bite of the sandwich, throwing it away, taking a bite, throwing it away, and just.
It was no. I was putting down. I probably had 3/4 of the pork sandwich. I ate the entire club sandwich. I had 3/4 of the ice cream sandwich. It's a peach ice cream sandwich.
Sounds great.
I had about 2/3 approximately, maybe 3/5. I would say 3/5 of the pimento cheese.
That's the one.
That's like a real Southern thing.
I'm not the
okay,
biggest fan of that.
You know,
Try.
it's
I'll dabble, but
I'm a when in Rome kind of guy. You know,
I don't fully get it. And
I
I
don't
love
get it either.
cheese. I love cheese.
They
you
don't
know?
even toast the bread. It's just
It's
like just
weird.
plain white
White
cheese,
bread.
like white bread with like a spread. Like I feel like I should be dipping
Yeah.
like a cracker in it, not eating
Yeah.
in between like untoasted bread. It's kind of
It is-
silly, but it was good. You
It
know,
is
whatever.
used as a dip too.
Listen,
Yeah,
Cubans
pimento
do silly
chicken.
shit too, so I'm not judging.
Okay. What do we got? We got Spaces at 11. Strazza and Pat. Jeff Mackey and I are going live at 1 o'clock to talk retail. Be there for that. Strazza is going to record a flow show today with Sean.
No,
Yeah. No.
I'm not going to be doing that or Spaces today. Actually, unfortunately.
What?
Yeah.
Strazza has a tea time.
Stop. No, he
Full
doesn't.
market tea time. No big deal.
I did live streams every day for the last 7 days? What's wrong
He's
with
only
you?
playing 9 holes. I
Well,
feel like I don't even know him.
The show must go on. So thank
Mary
you.
was so excited that she got to drive by the golf course that you play in. She was telling me.
I was excited.
Yeah.
Yep.
All right. Thank you to Dean Christians. Thank you to Kenny, as always. We'll be back tomorrow with Frank Capillari on the show. Tomorrow.
Ooh,
He hasn't been on in
Frank.
a minute. It's been a minute for
Frankie,
Frank.
baby.
cat right there, Frank. It's
Yep.
smooth cat.
All
The
right.
smoothest of all the cats.
Yeah.
Really?
Thank you, chat. Drop us a like. Check out all of the links to all of our free stuff in the description. StockMarketTV.com. We'll see you tomorrow.
Bye, guys.
Later.
I can't take no loss. I don't even know what it costs.